Okay, welcome to the loss relief section of CT. Here in part one, we're going to deal with a sort of an introduction, a sort of a broad overview, and give you a feel for the computation. Note that in part two, we'll deal with other losses outside of the trading area. So let's take a look at this first branch. Now, note in this section one, we're talking about continuing trades, businesses that are ongoing. So, first things first, what is a trading loss? Well, basically, it's a loss that has been incurred as a result of the difference between revenues and indeed allowable expenses, with allowable expenses being more than revenues. So, we're talking about an adjusted trading loss as opposed to, say, previously, we would have been referring to an adjusted trading profit. Okay? Now, in terms of the options for companies, there's quite a lot of information here. Now, don't worry about the number of different elements. In other words, the number of different options. Certainly, I recall the first time that I dealt with corporation tax losses, I thought, how am I going to remember all this? You will if you practice. Okay? So, in terms of a corporate trading loss, you'll see a number of different options. Now, these are all separate. So, basically, 5 in all, and I'm going to run you through in brief each of them. But remember, in particular for losses, the way to get up to speed is learn the basic provisions, for example, current then carry forward, and apply it to questions. That's the way that the penny is going to drop. So let's deal with the first one first. It says current year relief. It does what it says in the tin. I'm going to offset this trading loss or this adjusted trading loss against total profits, note, before QCDs of the current period. So I've got other income in the period, but I've got an adjusted trading loss. I'm just going to put it in as a minus, and offset against other credits, as it were, whether or not they are property income, interest income, etc. Okay? So that's current year relief against total profits, note, before QCDs, in the current year. Okay? Next one, current year and prior year. Now note what it says here, and this is important. Any losses remaining after set off against current year can be carried back the preceding 12 months. So what does that actually mean? It means that you have to do a current year claim first. You're a company. You've made a loss. You've got to offset against total profits in the current year before QCDs, before you go back to the prior year. Okay? Let's try and remember that. A lot to remember. You don't need to remember everything. Don't worry. Okay? Now, other thing to note is preceding 12 months, preceding year. Now, you may look at that and think, the preceding year would be 12 months anyway. Well, maybe it won't be. Okay? Maybe the examiner will shorten the immediately preceding period. Let's say to 9 months, which means that you can go back to it and you can take a slice of the period preceding the immediately preceding period. In other words, 3-month slice or 3/12 of the previous year. Do you see my point? So be careful with this. The examiner loves this trick and catches students out every day of the week. Okay, so what is this current and prior year relief against? Again, total profits before QCDs. You'll see that within number 1, current year relief, and number 2, current and prior year, we could end up with a situation where we waste QCDs. In other words, we offset an adjusted trading loss against other profits, and we end up not being able to deduct our QCDs. They're lost, they're wasted. A little bit like the personal allowance for individuals. If you offset a loss, if the personal allowance was covering income, you may be left with a personal allowance that isn't used. So QCDs for companies are not dissimilar. Next one for us, carry forward relief. Okay? And in this particular case, we're talking about total profits, again, before QCDs of the future accounting periods. Straightforward. Nothing fishy about that. Now, let's note this area of the 12 months. We mentioned it up top here in terms of prior year. Note, if the loss-making accounting period is a short accounting period, there's no impact, okay? But remember, if the immediately preceding period, so for prior year relief, yeah, note it's 12 months, okay? So I'm not worried about the length of the loss-making period. So say it's the current year, oh, it's 7 months, I don't care. What's the loss? 50,000, great. I care about the length of the immediately preceding period because I want it to be 12 months. If it's 12 months, it's simple. Just take the 50,000 back if you have total profits and you've offset against current year first. But what the examiner will do is make the immediately preceding period less than 12 months. Watch for that. It's his favorite trick. Let's take a look at the pro forma. Now, let me make this a little bit bigger because that's a little bit small, not just for you, but for my eyesight as well. That happens when you get old. You get dodgy eyesight, okay? So this is a pro forma in effect, sort of bringing together, it's a little bit too big now, bringing together the points that I made above. So let's just say we have a scenario. We've got 3 financial years, various details about income, etc., etc., etc. And what you can see is this is where we'd be deducting the relevant losses, okay? Now note, all of these are before QCDs, yeah? And in addition to that, they're all after we've actually populated, yeah, the computations, the CT comps, for all relevant income for the companies. Okay, what we don't do is to be putting these losses in as negatives. We get the total profits, because remember, most loss reliefs are based on total profits, and then we use the reliefs, okay? So, in terms of setup, try and be neat, try and be careful, learn from the questions, okay? Learn from the questions. Remember, in tax, learning from failure is where it's at. Keep failing, and then you'll succeed on the big day, okay? Let's look at this next area, the effects of loss relief. Now, again, this is straightforward because let's think about it. If I carry a loss back to the prior year, last year's tax return has been submitted and it will have been paid. So it's highly likely when we're using loss reliefs for companies and indeed for individuals that we're going to end up with either a lower tax bill in this year or perhaps a rebate of some kind. So really, the effects of loss relief clearly are to reduce our tax bill or to facilitate a tax rebate. It's always nice to get a check from HMRC. I do recall when I was in public practice working with clients, always very happy when they're not paying tax, but when HMRC are paying them. But that does mean, in a practical sense, that they're making losses. That's not so good. Okay? So, last area for us, remember, right-hand side of the page there was about continuing businesses. Now I'm talking about a business that is not continuing. And there's this special area called terminal loss relief. What does it mean in terms of a definition? Well, a terminal loss is basically, for corporation tax purposes, is the trading loss of the last 12 months. Okay? Now, where the company is actually ceasing trading, this is the way that we would deal with it. What we would want to be doing, yeah, is to toss up, yeah, the whole idea of, okay, well, we have the normal provisions, i.e. the loss the last account relieved against total profit, same period, current year rules. In other words, we have that provision, but this terminal loss relief allows you to go back 3 years. I mean, think about it, it's logical, isn't it? We've got a business that's terminating and it's made a loss. The revenue give you a break. They say, well, okay, well listen, what we'll do is we'll let you go back 36 months preceding the last calendar year on a LIFO basis. Note, LIFO, last in, first out. So you can see that this particular provision, yeah, note only in terminal loss relief cases, is very useful because you're not just going back a prior year, you could go back 3 years, okay? That's what makes it beautiful, okay? So that concludes Loss Reliefs Part 1. Please do join me for Loss Reliefs Part 2. Loss Reliefs Part 2, shorter video, pretty straightforward. Basically, property losses, capital losses. Nothing for you to worry about. Very, very straightforward. I hope you found this section here where I've relayed to you all the various forms of relief in relation to corporation tax. Helpful. Many thanks.